Australian GDP growth increased 0.7% over the December quarter, largely in line with market expectations. This follows a relatively flat quarter for growth over Q3. The strength in GDP growth in Australia highlights the divergence between the Australian and the New Zealand economy, which weighed on the New Zealand-Australian dollar cross yesterday. Looking over the second half of 2010, Australian growth was below trend. However, the Reserve Bank of Australia has recently noted that GDP growth was likely to be weaker, but due to supply-side constraints rather than weaker demand. Production is up 2.7% on year-ago levels. However, incomes are up 7.7%. This highlights the strength coming from Australian export commodity prices, largely on the back of strong demand from China. Looking at consumer spending, it remains relatively weak. However, Australians have capacity to spend with rising incomes and strong jobs growth. The New Zealand dollar fell sharply yesterday, falling almost a cent in trading. The New Zealand dollar opened at 75 cents against the US dollar, but finished the day in the evening around 74 cents. The sharp decline was triggered by comments by Prime Minister John Key relating to monetary policy in New Zealand. He noted that market expectations were for a rate cut by the Reserve Bank next Thursday. When asked if he thought rate cuts were appropriate, the Prime Minister did note that lower interest rates would indeed be helpful, but it was up to the Reserve Bank of New Zealand to decide. The Reserve Bank of New Zealand has policy independence from government and Treasury. Nonetheless, the comments by the Prime Minister does add pressure for the Reserve Bank to cut next Thursday. Adding to the pressure has been recent declines in retail mortgage rates by some of the banks in anticipation of lower rates next week when Alan Bollard cuts. We are expecting the Reserve Bank to cut the OCR 50 basis points in response to the earthquake. Overnight, global sentiment was relatively upbeat, which helped prevent the New Zealand dollar from falling further. Nonetheless, the New Zealand dollar did remain relatively weighed down by yesterday's comments. Equity markets lifted strongly, boosted by a strong ADP employment report. This boosted expectations for US non-farm payrolls, which is due out over the weekend and is more closely watched by markets. But the ADP employment report did show some encouraging signs that the US labour market recovery is gaining momentum. In particular, gains in employment was broad-based across different sectors. This also matches recent comments by Federal Reserve Chairman Ben Bernanke, who noted that there are grounds for optimism on the labour market.